Hey, everybody. I am very excited today to have an amazing guest with us. His name is Suresh. He is a VC with Saama Capital. Suresh has a phenomenal story. Besides being an awesome, humble, incredible guy, has an incredible story with us to share. And there are plenty of lessons, I'm sure, and we are going to learn from his journey. So Suresh, thank you so much for being here with us today.
Great. Thanks for having me, Ephraim.
So Suresh, let's jump right into it. So before Saama, before Silicon Valley Bank and Boston and everything else, let's jump right into before everything began. Where are you from and what was your upbringing like?
So I was born and raised in West Virginia. My parents emigrated to the U.S. in the late 60s. I was born in West Virginia, kind of grew up there, all the way through going through public schools, through high school before going to the University of Pennsylvania for my undergrad. I did the Wharton undergrad program. Traditional kind of first/second generation immigrant family. My father was a surgeon that came to the U.S. As we talked about before the recording began, obviously a heavy emphasis on education, because that's what helped bring my parents and my father in particular to the U.S. and gave him the opportunity. So that was something that was clearly something of emphasis for my sister and myself.
Right. So let me ask you like a side question. You being obviously a first generation coming from your parents are from India, you're the first generation, and the focus is on education. Do you see as your children, for example, which are already the second generation, is there a difference in the upbringing, from Indian parents, I'm assuming?
Yes, I think so. Certainly academics, do matter. But maybe the emphasis on kind of what the set of skills that are required, and kind of just the times are different, and the perspective is different, having grown up with first generation parents and now being a second generation parent. I think the times change, the perspective changes, and I think education remains important, but maybe not with at least for me, the high level of singular emphasis. I think there are other skills, social skills, and playing sports and other things like that I think are important as well.
So then it comes to the basic question, being a child of immigrant parents, and the focus is totally education, where did this whole tolerance or this whole, this passion for entrepreneurship come from to jump into something that's totally risky?
Again, I'm on the investor side, so I'm not taking the same level of risk as the entrepreneurs. So I don't want to necessarily put myself in the same category. Obviously, I've been involved with starting a couple of venture firms, but I do think that's different than I think what the entrepreneurs that we provide capital to do themselves. I've always been interested in the investment side, and I was the kid that worked in a brokerage office my summers in high school to learn more about the stock market, and that's kind of what led me to want to pursue finance and business, and that ultimately led to working at McKinsey for a couple of years post graduating from Penn. And after the 2 years was up, I wasn't ready to go to business school, so I wanted to see whether there are opportunities outside of consulting, and thought maybe a good opportunity to go back into looking at the investing side. And I had several friends that had gone into venture capital, and they described it, and it seemed like an interesting thing to try, honestly, for a couple of years before applying to business school and going down what I would call the more traditional path. So that's kind of what I did, and I had opportunities in venture capital. There was something in public investing, but this the venture capital opportunity seemed something worth giving it a try. So I moved from New York to Boston and joined Boston Capital Ventures as an associate, and got my venture capital career started in 1994.
Oh wow! So you've been at this for a long time.
I have.
Yeah. So what would you say from like 1994 to 2018? What are the differences you see? I mean, sure, there's plenty of things in the difference in between the entrepreneurs, between the venture funds, or what you look for in startups.
The world has completely changed. I mean, obviously now I'm, for the last 12 plus years have been on the India side. But even in the US side, I mean, back in those days, the industry was much, much smaller. And, the round sizes were smaller. The capital availability was, significantly smaller. I mean, I still remember back in those days, you'd have a Series A round or a Series B round of $2 or $3 million that's split by two firms. If it goes up to 5 million, you end up having, three firms splitting it, which, unless it's a seed round these days, you don't necessarily see that happening.
Right.
So it is, it's, I won't call it night and day difference, but it's, you kind of look back and kind of see how far the industry has come in terms of, capital availability and, how strategies have shifted and, kind of the movement away from syndication, largely due to, capital availability and money under management.
Right. Like a fund like, for example, Softbank, it would be unheard of. I think back in 1994, $100 billion fund is something probably like, man going to Mars to a certain degree.
I mean, the industry, the entire U.S. venture industry, didn't have that amount of capital for many, many years. Mm-hmm. I mean, probably until, kind of the Dotcom kind of bust and the capital raised around that time. I don't think you saw $100 billion available.
Wow. So have your first principles of investing in an entrepreneur or a startup changed from then until now?
Not really. I mean, in the end, you're looking to find, passionate, committed, individuals that you believe can be successful building something valuable. You're still looking at large markets, and I don't think that's changed at all. You are still looking. It is still for us entrepreneur driven.
Right. So, what are those characteristics that you look for in an entrepreneur that can make a successful startup?
I think part of it is some element of prior success. Obviously you look for signs of resilience and grit, I guess is the new term, and the ability to be open-minded enough to shift if times and circumstances warrant. I think that's an important element of how we think about entrepreneurs, that things change, and does this entrepreneur have the ability to build something, or if find that it's not working out, they can figure out how to change it to go on a different path to make it successful.
Right. Great. So let's jump back to your journey. You have been involved in India for the past 12 years. So the basic question obviously arises that what are the differences we see between the U.S. ecosystem and the Indian startup ecosystem?
I mean, I know it's the standard question to ask. Honestly, I don't try and compare the two, because I think India's got its own ecosystem that's developing. I mean, it has the same elements. You don't have as many repeat entrepreneurs just because you don't have as many, it hasn't been around as long.
Right.
And, you do need to have, exits and other things happen in order to have repeat entrepreneurs. Capital availability is, I think, is plentiful. So I don't think that's an issue. I think there are certain functional areas where you don't have as much depth of talent like you do in the US. But, overall, it's, I don't try and, benchmark it against the US or saying, oh, this is the US, in year 10 or 12. I do agree with the point that you made earlier about the ecosystem being able to develop faster, just because it has the benefit of seeing what has been done in in the US, what's been done in China. And I think you'll find that, the ecosystem and the participants are fast learners, no surprise.
Right. And one of the most common things we have in India is the fact is a lack of exits. It has not been able to mature much more quicker, or a lot of exits, so capital being returned. What do you think could be done, or what can be happened to fix that issue in general?
I don't know whether there's anything, I think, what do strategic buyers look for? Kind of, they're looking for market entry. They're looking for capabilities that they don't have themselves. So I think it's a matter of, continuing to, go after large problems, understand kind of where gaps are, not just in an Indian context, but in a global context, and, build companies and build teams that, are of interest to global buyers.
Right.
So I don't think there's any magic. I think it'll take time, and I think part of it is being smarter about marketing and building visibility and kind of highlighting kind of what's actually being done in some of these companies.
Right, and like we spoke about before, and just mentioned quickly, is that what India is doing now is going to accelerate at a much quicker pace than what US did. It's more sort of on the path like China did. And to see the innovation that they have coming currently on, especially through mobile, right? Their e-commerce, the shopping, the banking, the healthcare is just a phenomenal thing to see what's happening over there. And it's going to constantly continue to change. So, being 25 years in the business is just amazing. I mean, there are quite a few people, but there's not a lot in the business for 25 years. What are the common mistakes you see startups making and that they should avoid?
One thing that we see, and this usually comes up in good times, is companies raise too much money, and they're more focused on valuation and loading up on capital as opposed to right-sizing financings and making sure that the capital that's being raised is used properly. And listen, there are a number of dynamics at work there, so I don't want to pin it all on the entrepreneurs, but I do think there's an element of what do you really need and what are you going to do with it, and what's a reasonable level of cushion to do that before you potentially raise another round and go in for another capital raise. Some of the challenges are listen, the dilution equation hasn't changed, right. So more money giving up the same amount of the company just means you've got a higher valuation that you need to increase from in order to raise the next round. And over time, unless the company performs and executes well, that's not an easy thing to do. And times change. I mean, you go from a buoyant time to a downdraft, and even if you're performing well, guess what? The math doesn't work.
Right. So, tell us about a dark period in your VC career. Some time that you thought that all hell was going to break loose.
I mean, I was an investor during the Dotcom bust, so granted, it's been 20 years, but I do still remember it. Actually, I guess the bad part happened like maybe 18 years ago.
Right.
But it is a time that any of us that lived through it won't forget. I mean, the amount of cost cutting that you had to do, learning about how to wind down companies, learning about arcane laws that were on the books that were meant for manufacturing companies, like the WARN Act, that all of a sudden got applied to tech companies. So there are all sorts of things that you learn during those periods, but in some ways, it does shape how you think and approach, difficult situations, and more importantly, kind of helps you understand kind of what happens on the other side of boom cycles. Having lived through several of these, I think it does provide a perspective from personal experience rather than kind of, hey, I read about the dot-com bust. Very different living through it and kind of seeing what comes out on the other side.
Right. So how much of like a dot-com bust is in your head when you're evaluating a new startup, or when you see us going to?
I don't think it. To me, the dot-com bust is more about it's a cycle. Mm-hmm. I don't think about that when we're evaluating a startup, but I do think about how where we are in the funding cycle and kind of the boom or the bust period we are, and how that may play into how a company can develop or how capital can be raised. And just counsel the entrepreneurs appropriately based on that.
Right, and so based upon that, where do you think we are currently holding now, 2019 and going forward?
I think we're at a peak, or actually potentially past peak.
Mm-hmm. So you're saying we're going for bust, or we're stable?
No, I don't think I don't think you ever go for count on a bust, but I do think what it takes to maintain kind of upward momentum from a funding market standpoint, only goes higher and higher the longer the boom continues.
Right.
So you're priced for perfection, and that margin for error is very, very slim. So anything happens on the geopolitical front, in a company's existence, or in the stock market, or anything like that, it doesn't take much to throw things off course.
Correct.
And that kind of has a it cycles through all aspects of the fund, the VC ecosystem.
Mm-hmm. So then what are practical steps that an entrepreneur or a startup could take in order to survive going through a hard time?
I mean, I think it's about being smart with the money that you have, and understand that if you're not going to be able to raise capital for a while, what you have two sources. You either have the cash on your balance sheet and make that last a lot longer, or you have to see whether your existing investors will continue to support you, even if times get very, very tough. There's not. I mean, it's kind of like when people say, "Oh, what are your exit strategies?" Well, there's three of them: you sell, you go IPO, or you go bust. I mean, there's no magic around this. You've got to shepherd your cash that you have well, because cash is life.
Okay, 100%. So talk to me, like, what are some preconceived notions they think entrepreneurs have regarding VCs that are totally false?
I have no idea. You'd have to ask them. I'm sure there's plenty of them out there. I have no idea. Well, actually, I'll give you one that you just send in. And I think this seems to be particularly common in India. That the way to raise money is to email VCs out of the blue, or connect with them on LinkedIn, or send them blind messages and expect that you're going to get a response back, or that you're going to get a meeting that way.
Right. Well, so that's definitely, I think that's all around the world. It could be. But what would you say the best way is for an entrepreneur that, say, wanted to raise money from VC, to go ahead and get connected with them?
Well, I think you find somebody, kind of a common connection that could make kind of a warm introduction, and maybe with a bit of an endorsement, saying, "Hey, I know this guy. This is what he's up to. I think it warrants a closer look." And that's a step in the right direction. It may not get you the meeting, but it's certainly something that will help your cause out.
Correct. So based on that, what are some of the things that an entrepreneur could do to prepare better for a meeting with a VC, if either looking to raise money or looking to get advice from them?
No, I think come in prepared. I think you don't go to a tech firm and pitch a consumer products idea, right? I think just being smart on who your audience is, I think is really important. I think one thing that entrepreneurs should be mindful of is you should do as much diligence on the investor as they do on you. Know who you're partnering with, and are they the right group? Do they have the right background? Is there a good chemistry with the investment partner that you're working with? What's the firm's background, and what's their where are they in their fund cycle? If somebody's in year 4 or year 5 of the investment period out of the 10-year cycle, is that the right time to go and talk to them about doing a pre-seed investment, very, very early on? Will you be given the runway due to fund life from that investor? So, I mean, I think these are things that are important kind of context to put the fundraising process in.
Right. So you had, I guess, either obviously an amazing blessing, but I'm going to assume incredible intuition too, to invest in two amazing companies, PayTM and SnapDeal. So I'm going to assume your intuition is phenomenal to invest in guys like Vijay and Kumar. But what was it like back then? A company like PayTM. What was it then back then when you gave it?
It wasn't called PayTM then. It was called 197 Communications, and we invested in Vijay and his mobile value-added services company. But again, it was a bet on the entrepreneur.
Mm-hmm.
there was a business there, but, as he saw the mobile VAS business starting to kind of mature, he had the idea of, this mobile wallet. And, he took the company in a completely different direction. And he obviously has made something fairly substantial out of it. So honestly, the credit goes to Vijay for making PayTM what it is today. We had the good fortune of supporting him and being along for the ride. But, again, I still remember some of the conversations around PayTM where he had this idea around the mobile wallet. And, Vijay's got many, many ideas. And, it sounded interesting. We had no idea whether it would have legs or not. And just the message to him was, hey, try it out, but don't take your eyes off the ball on the main business, because that's where, the cash flow is, and, where all of our revenues are coming from.
Wow. I hope you still have shares in PayTM. I mean, I definitely hope you still
we still have part of our stake.
Wow. So what is something that, your risk tolerance, 'cause I'm assuming, being an investor, being a VC, your risk tolerance built up over years. Being there for 25 years, you've seen the ups, you've seen the downs, you've seen companies flop, and you've seen companies be successful. How can someone become better at managing their, personal risk tolerance?
I think it's something you build over time. I think part of it is, there's an old saying that actually I think can't remember who it actually came from, but it's not my own. I just don't have the proper person to attribute it to. They say it goes something like, you build knowledge from learning from your own mistakes. You build wisdom through learning from the mistakes of others. So, I think being in a position where obviously you make your own mistakes and hopefully learn from them, but also learn from the mistakes of others and work alongside folks that know and understand the investment world well. Right. There's no substitute for the experience that you build over time. Some of it comes dated, some of it may not be accurate, but there's still gems of wisdom that you kind of acquire over the years that you can apply to new situations. Right.
And then flipping that around, is there some practical steps you think that someone can use to become a better investor?
I'm not sure. I mean, I guess over 25 years, you interact with a lot of folks and you have exposure to a lot of companies, a lot of other investors. I mean, I think, being open-minded, having conversations, and always, I mean, again, this is a business where you're always learning, nothing's static. And, particularly in fast-moving industries, there's a lot that can be gained, obviously in terms of domain knowledge, meaning particular industries, but there's also other things that can be gained in just the learning about the art of investing.
Mm-hmm. Right. So then tell me, what are some non-obvious habits or ideas that you have applied to your life that it can change your life?
I don't think there's anything non-obvious, or there's no magic in all of this. I think everybody's kind of got their worldview. They work hard, hopefully, have a positive attitude. I mean, to me, there's nothing, non-obvious. Everybody's got to find their own path. Everybody's got their own formula to what works for them. So I don't know whether there's any necessary universal kind of set of habits that work for everyone.
Right. Well, everyone, correct. So then, who are some people that you admire that have made a difference?
I think when it comes to the venture industry, I mean, I've had the good fortune of watching and interacting with a number of very smart and accomplished people. One person that does stand out in my mind is a gentleman named Steve Halstead, who was one of the founding partners of a group called Centennial Ventures, based out of Denver. And, I always marveled at his, poise and communication ability, and the way he ran a board meeting and the way he ran strategic planning sessions, just, just incredibly, savvy is not the right word, just, had this self-confidence and, just grace about how he conducted himself and interacted with others and got things done. And, that's something, that I certainly, I think about when I see how board meetings run and see how he interacted. And, I certainly can't do it myself because I think, he's a extraordinarily gifted character, but, there's certainly observations that I can try and, take from and apply in the appropriate manner.
Right. Wow. So and you have any books that you believe influenced your way of thinking that you recommend to others?
Not necessarily. I mean, I'm not a big fan of reading business books, so I prefer reading, other things that, hopefully, help me use other parts of my brain. But I think generally reading a lot is a good thing. Just being open-minded to ideas and different ways of thinking.
Right, correct, totally. So what do you tell that new entrepreneur that comes to you that's debating to start a company for the first time, and it comes, hey sir, and he comes to Suresh, is like, I'm debating, I'm not sure. What advice do you give him?
Yeah, I'd say, how much do you believe in this? Are you ready to kind of quit your job? Do you believe in this enough where you want to do this full time and, kind of take that plunge? I mean, I think it's a gut check, right? I mean, if you're not willing to do that, then, maybe the idea is not as great as you think it is, or you don't have the conviction in it. Maybe the idea is great, but you don't have the conviction, both of which could be failings, right? So to me, that's the first question. I mean, you ready to go without a salary? Or is your family ready to, do that? I mean, there's all sorts of dynamics that come to play in a decision like this.
Right. It's incredible you mentioned about the family, for example. I had the opportunity to speak with a big entrepreneur from India a few weeks back, Krish, from a company called ChargeBee. And he mentions that, saying one thing an entrepreneur should make sure of is that not to change the lifestyle that his family got used to before you started on the entrepreneurship journey.
No, I think it's a great idea. I mean, it's a very good thought. Again, these are all things that, I mean, everybody's involved, right? But if there is going to be a change, are they willing participants?
Correct.
And do they really know what's involved? Mm-hmm. I mean, listen, you're a single 24-year-old person. There are a few other people that are usually very few other people that are directly impacted by your choices. Right. You're 35, you're married, you have 2 kids. Then that's they're in school, they have there's a certain lifestyle. That it's a different circumstance.
Great, totally, yeah. So then, talk to me about your decision framework of how do you apply, and not just in making investments, but a hard decision you had to make, and the applied framework you applied to make it.
I think a couple of things. I mean, in some ways, you need I kind of view it kind of starts with guiding principles, and kind of in some ways, the guiding principles help frame how you think about things. And once you do that, if you have the right kind of mindset and kind of guiding principles, it kind of leads you down the right path.
Right.
It doesn't necessarily mean you're going to make the right decision, but it points you in the right direction. So at Saama, any decision that we make with regard to investments or managing the portfolio kind of all starts with, okay, what's in the best interest of our investors? Because in the end, it's their capital that we are investing in, on whose behalf we are working. Mm-hmm. And if, we kind of put that front and center, what comes out of that is, it becomes much more clear what the right thing to do is, and how you might take a decision forward. Right. And, there's, these decisions, aren't and shouldn't be made in a vacuum. I mean, I think the discussion is warranted, and I think helps either validate or invalidate some of the things under which you're making decisions, and that also I think is a key element to making hopefully good decisions.
Right, 100%. So then, I would love to know, what are your principles? That's something that what guides you on a daily basis?
Well, I think on the work front, it's, it is, kind of what is in the best interest of our investors. And, I think the other thing is, when you're director of a company, putting your company hat on. And, most of the times those things are not in conflict, but, there are times when you might find that, one is, they find themselves in conflict, and that's where you need kind of more thinking and more discussion. And you go find, you talk internally, you talk to advisors and folks whose counsel you trust, and you kind of work through it.
Right. And on the personal front, what would you say your principles?
Oh God, I mean, again, I think in some ways, straight on the straight and narrow. In the end, your reputation is all that you have.
Right.
Both personally or professionally, and making sure that you can kind of keep your head up. You're setting a good example for your kids. You're kind of active and involved in a positive and meaningful way in anything that you do.
Right. Which brings us. How can someone maximize their time here on Earth and make the biggest impact? Because we're so focused in the 21st century, so focused with our work, our career, we're so involved in technology, social media. But how can actually someone leave a lasting impact? What can we focus to maximize our time over here on this planet?
To me, that again, that's an individual question. Right. I mean, what is impact varies, from person to person. What is most meaningful to somebody? I don't think there's something universal that everybody is striving for. Everybody kind of determines what is most important for them, and what they want to put their time and effort behind in order to, leave this place, a better place than when you first arrived.
Correct, 100%. So what message would you tell a young Suresh coming out of college for the first time, facing the world, has all the options available? He could go into VC, entrepreneurship, or even could go work behind the counter. What do we tell him?
I think, listen, there's opportunities to learn in every single thing that you do, particularly when you're coming out of college. There's almost no bad decision you can make. I kind of thought about the options that I had, and looked at it from the standpoint of what am I going to maximize my learning in over the next couple of years? Because when I came out of college, the idea was a couple of years and then go back to business school. So it was more about, okay, where am I going to learn the most in the next couple of years and deploy that. To me, being in an environment with good people that you can learn from is kind of how I would think about making a decision like that. Another thing would be, a career is a marathon, not a sprint. Kind of think about the long term. There's very few decisions that you can't recover from. So even if it's not the right decision, as long as you recognize it and change accordingly, that can be something that isn't going to be a problem. I think the other thing is, don't confuse kind of what you do for a living for who you are as a person.
Wow, that just that last one just hit a chord. That's such a that is such a thing. I think we all, I mean, I won't say you, but we all get confused upon. Mm-hmm. We always associate that what we do is who we are, and who we are is what we do. And in order to differentiate those two aspects, such an important character thing. So I want to did you ever make it back to business school?
I never did. I applied, I got in, and I deferred, and then I never went back.
Well, assuming hopefully one day I'm not sure if you need it anymore, but it'd be good to get it.
I'm old enough now where that's probably not in the cards. If anything, I've actually gone back and lectured at business schools, as a guest lecturer. So that may be my only opportunity to, step back on campus.
Amazing. So Suresh, first, I want to thank you so much. This has been really, really insightful and knowledgeable. I've learned a tremendous amount, not just about Saama, but about yourself, about many other characteristics and specific things regarding life, decision framework and things like that. So I want to thank you so much for your time. Thank you.
Great. Thank you. Enjoyed it.
Thank you.